Hello, my dear students. Welcome back. Hope you guys are all doing good. Hope you guys are all perfectly fine. So, in this session, we will try to understand the next standard, which is SA 550. Very simple standard, very small standard, not at all complicated, very simple one. So, SA 550 is a standard which is going to talk about related parties. So, without any delay further, let us try to understand in a detailed manner what exactly is this standard about, what we are going to learn in this chapter, learn in this particular session. So, as I have told, what is the title of SA 550? The title of 550 is Related Parties. So, you might have already paid attention, even in the subject of accounts or in the subject of law, there is always been a huge importance given to related parties. There is always so many things, so much of huge importance will be given to the related parties. Like if you would have paid attention, there is a dedicated standard, accounting standard 18 we have. So AS 18, which is going to completely talk about related party disclosures. And even you might have seen under Companies Act 2013 also, under Companies Act 2013 also, the act says there are so many disclosure requirements relating to related parties which every company is required to give. Like who are the related parties, how many transactions, what kind of related party transactions they have done with them, and also what is the total value of the transactions. So all that things you are required to give a disclosure. So if I show you an example of disclosures which generally the companies will give in their financial statements, let me show you a brief what kind of disclosure requirements they will give in the financial statements. So see here, I have Reliance Industries Limited financial statements. Just I want to show you the level of disclosures they will give relating to related parties. So just let me give you a glance here. This is the auditor's report. This is actually consolidated financial statements. I will show you standalone financial statements and the level of disclosures they will give for related party transactions. Let us have a quick look at it. Yeah, see here. So this is actually the extract of notes to accounts of Reliance Industries Limited. They have a dedicated note in which they try to explain, they try to give some disclosures relating to related parties. Like as you could see here, first they have given the list of all the related parties, the names of all the related parties they have given. See, this list is never ending. So if you see, totally the Reliance Industries Limited is having the related parties of how many related parties are there? 445 related parties are having. Able to see the figure? So first they have given the list of all the related parties with which and all entities they have a relationship. They have given a list of all the related parties. And how many related parties are there? 445 related parties they are having. And not just that, if you see here, they will also give the transactions which have taken place with the related parties. Like for example, from the related parties, they have purchased some property, plant and equipment. From subsidiaries or beneficiaries, they have bought the PPE to the worth of 3,537 crores. From associates and joint ventures, they have bought 2 crores worth of PPEs. So like this, is there any purchases or investments you have done in the related parties? Is there any sale or redemption of investments you have done with the related parties? Loans and advances received from the related parties? Loans and advances given to the related parties? So like that, what and all related party transactions you have done? Not just that, the balances, what are the balances with the related parties? Like for example, if you see here, these are the balances with the related party as on 31st of March of the year, how much outstanding amounts are there from the related parties. So if you see here, dedicated some 4 or 5 pages of information. See, this is also regarding related parties only. So regarding related parties, see how much level of disclosure they have given. Sir, why do you think the companies are giving, companies will spend this much amount of time and energy on giving the disclosure regarding related parties? Are they doing it out of their own choice? Never. No company will voluntarily give all these disclosures. So the companies are giving this much level of disclosure because there is a requirement both under accounting standards as well as the Companies Act 2013 to give these many number of disclosures with the related parties. These many number of disclosures are mandatory. Whatever I have shown you, Reliance Industries Limited has given disclosures. That is not out of their own choice. They have given those many disclosures. Why? Because that is a requirement of accounting standards and the Companies Act 2013. Why do you think that much amount of priority has been given to the related party transactions under accounting standards and also under Companies Act? Why? Because whenever you have a related party transaction, there is a high risk of material misstatement. Whenever you have a related party transactions, the chances for the manipulation of the transactions will be much higher. For example, if a company does a transaction or enters into a contract with some unrelated party, they will not be able to influence much. They will not be able to influence the other party. But however, assume there is a company, it is doing a transaction with the subsidiary company, or it is doing a transaction with the associate company, it is doing a transaction with a joint venture, or it is doing a transaction with the holding company. Now you tell me, since both the parties are related, they can do a lot of manipulations or not? So generally, whenever there is a related party transaction, that related party transaction might carry a little bit of higher risk. Sir, why that risk will be there? Why that risk will be there is why? Because in case of related party transactions, there is a huge scope for manipulation. You can influence the other party, you can dictate the terms and conditions in the case of related parties, which you can't do it in the case of unrelated parties. So that's why both the accounting standards and also the Companies Act has placed that much amount of disclosure requirements for the related party transactions. Why? Because they carry a huge risk. So that's why even the standards on auditing has also thought, even the institute has also thought, not just under accounting standards, not just under Companies Act, we need some guidance to be given even for auditors also for verifying related party transactions. Not just accounting standards are talking about related parties, not just Companies Act is talking about related parties, even there is a dedicated standard on auditing, SA 550, which is going to help the auditor to obtain audit evidence regarding related party transaction. Sir, why that much emphasis, sir? Why? Because they carry a huge amount of risk. They carry a huge amount of risk. So what exactly auditors should do with regard to related party transactions? That's what they try to explain in SA 550. What are auditors' responsibility? As an auditor, what is your responsibility regarding related party transactions? That's what this standard is going to talk about. Very simple, guys. If I have to conclude in one single line, as per this standard, what are auditors' responsibility? If I end it in one simple line, I will say, under accounting standards, there are some responsibilities on the auditor. There are some responsibilities on the management of the companies to give some disclosures. And even Companies Act 2013 also has given some disclosure requirements regarding related party transaction. So the management of the companies, whenever they are preparing financial statements, they have to comply with both accounting standards and also Companies Act. As an auditor, what is your responsibility is whatever disclosures which are required as per accounting standards and the Companies Act, whether all that disclosures have been given properly in the financial statements and related party transactions are free from material misstatements. That evidence obtaining is your responsibility. That's it, nothing else. So there are some disclosure requirements, there are some accounting requirements which are put on the managements of the entities. Can I say applicable financial reporting framework? Yes. See, accounting standards and Companies Act is nothing but applicable financial reporting framework. So applicable financial reporting framework has put some responsibilities on the management of the entities. They have put some responsibilities on management of the entity. So as an auditor, my responsibility is whether the management is fulfilling those responsibilities which are assigned to it under applicable financial reporting framework. Obtaining that evidence is auditor's responsibility. That's what this standard says. That is what the simple summary. If I have to end it in one line, what is auditor's responsibility? Whatever management responsibilities are there under applicable financial reporting framework regarding accounting and disclosure requirements of the related party transactions, whether all that responsibilities are fulfilled by the management or not, obtaining audit evidence is the responsibility of the auditor. That's all. The standard is over. The same thing they try to drag it in a detailed manner in SA 550. So apart from that, nothing else will be left out in the chapter. That is what the simple gist of the standard. Very simple standard only. At the same time, not that important from the examination perspective. Very rarely they ask a question from this chapter, from the standard SA 550. But anyhow, let us try to understand it from the material in a detailed manner. So SA 550 related parties. So auditor's responsibility regarding related parties. Sir, first of all, what is the meaning of related party? You are telling related party, but how to decide who is my related party, who is not my related party? Now, the standards on auditing did not take extra load. The standards on auditing did not take extra load to define the related parties once again. What the SA 550 simply told, see, whatever applicable financial reporting framework is there, if you are conducting audit of some client, that client will have, depending on the nature of the organization, they will have applicable financial reporting framework. If in the applicable financial reporting framework, the term related party has been defined, those parties only will come under related party. Whatever definition has been given to the term related party in the applicable financial reporting framework, the same thing they are saying it in the standards on auditing also. They told we will not define the related party separately. For the client entity, applicable financial reporting framework will be there. No, in that applicable financial reporting framework, whatever definition that was given to the related party, the same definition the auditor also has to follow. Now you will get it out. Sir, I am conducting audit of some company or some entity. For that entity's applicable financial reporting framework, in that applicable financial reporting framework, related party is not defined. Sir, you told if for my client's applicable financial reporting framework, if related party is defined, follow that definition. Sir, but I am conducting audit of such an entity in their applicable financial reporting framework. Then they did in that applicable financial reporting framework, they did not define the term related party, sir. Then how to decide? Then they have told one simple definition. Okay. Very simple, guys. If applicable financial reporting framework defines a term related party, follow that only. In case if the applicable financial reporting framework does not define the term related party, then follow the definition given in the standard SA 550. That definition is also very, very simple. If I start reading it, a party that is either a related party as defined in applicable financial reporting framework. That's what I am telling. SA 550 simply told, in case whatever applicable financial reporting framework is there, in that they have already defined the term related party, follow that definition only. However, where the applicable financial reporting framework establishes minimal or no related party requirements, if in the applicable financial reporting framework, they did not define the term related party, or they have defined it in a very minimal way, that means there is no complete definition of related party in the applicable financial reporting framework, then follow the definition whatever they are saying here. What is that? A entity or a person or other entity that has control or significant influence directly or indirectly through one or more intermediaries over the reporting entity. And let me read all this thing, then I will try to summarize. Another entity over which the reporting entity has control or significant influence directly or indirectly, or another entity that is under common control with the reporting entity through having common controlling ownership, owners who are close family members, and common key management. Sir, what they are trying to say here, I will try to summarize it in a simple way. I think I have already summarized it in the form of chart. Let me see here. Yeah, okay. I will even try to simplify it more. Sir, if the applicable financial reporting framework, whatever applies to my client, they did not define what is related party, then how to define it, sir? Very simple. Reporting entity, that means your client entity. You are conducting audit of the client X Limited. Someone is controlling or having influence on this client X Limited. If someone is having a control or influence on this client X Limited, for example, Y Limited is controlling or influencing X Limited, then we will consider Y and X as related parties. Or X Limited is controlling someone. So your client company is X Limited. So either someone is controlling your client entity, or your client entity is controlling or having a significant influence on another entity. Take for example, your client is having control or influence over Z Limited. Then the SA 550 told, okay, we consider you both are also related. Understood? Either someone is controlling my reporting entity, that is my client entity, or my client entity is controlling someone. Then we will consider them as related. And one more thing also they have told, assume that my client company is X Limited, there is another company Y Limited. If X Limited and A Limited both are controlled by some third party, assume that some B Limited is controlling your client company also, and it is also controlling some another client A Limited. Then they are telling, okay, if third party is controlling you both, then also will consider you as related. One more thing they say, owners who are close family members. The owners of X Limited, the owner of A Limited, both are close family members. Then also will treat both as related. Or owner X Limited key management, A Limited key management, both are same. Like for example, whoever directors of X Limited are there, the same people are acting as directors of A Limited also. Then also will call it as related. So very simple definition, guys. If applicable financial reporting framework defines it, follow that definition only. In case if the applicable financial reporting framework did not define it, then follow this definition. This definition is very simple. Someone is controlling your client, related party. Your client is controlling someone, related party. Or your client entity and some other entity, both are under common controlling, both are under common ownership, related party. Your client and some other entity, both are having owners who are close family members, related parties. You and other entity whose key management are same, related parties. Understood? However, one more point is also there. However, entities that are under common control by a state, that is national, regional or local government, are not considered related unless they engaged in significant transactions or share resources to a significant extent with one another. Nothing but entities which are commonly controlled by a state. Assume that if some entity is getting controlled by the government, if something is getting controlled by government, take for example ONGC is there, or at the same time you also take there is another entity, Indian Oil Corporation. See, both are under control of the government. No, government is holding more than 51% of the shares. I told if both are owned by some common third party, for example IOCL is also controlled by government and ONGC is also controlled by government, central government. If in case if the entities are under control of central government, generally I told if both are under common control, we will treat them as related. But there is an exception. In case the entities are under common control of state, central, or another government, then we will not call them as related. Then we will not treat them as related unless they engage in some significant transactions or they share some resources. Unless they engage in some significant transactions or they share the resources. For example, ONGC, Indian Oil Corporation, they are using the same pipeline. Then we will call them as related. Generally, as per the definition, if two entities are under common control, we have to treat them as related. But this logic does not become applicable in case if entities are under control of central, state governments or local authority, unless they share some resources, unless they engage in significant transactions or they share resources. Just because two entities are under the control of government, don't treat them as related unless they do some transactions, unless they share some resources. Clear, everybody? Next. So this is what the meaning of related party. Now let us try to understand what else they say in the standard. Nature of related party transactions and relationships. How the related party transactions and relationships will be. See, generally, if you are doing transaction with the related party also in the normal course of business, like the way you do the transaction with an unrelated party, if you are doing the transaction with the related party also on the same terms and conditions, then generally they don't have risk. So if you are doing the transactions with the related parties in the normal course of business on the same terms and conditions, like whatever terms and conditions which will be there for a third party, the same terms and conditions if you are following with the related party also, then they might not carry higher risk of material misstatement. So that's what they say in the first point. Many related party transactions which are in normal course of business, in such a circumstances, they may carry no higher risk of material misstatements of the financial statements that similar transactions with unrelated parties. That means if the transactions are, whatever transactions that you are doing with the related parties, if they are in the normal course of business, whatever terms and conditions you follow with some unrelated party, even if the transaction with the related party is also happening on the same terms and conditions, then generally in those cases, they might not carry higher risk of material misstatement. But in some cases, related parties will carry higher risk. Sir, in which circumstances related parties will carry high risk? Obviously, when the terms and conditions are not as per normal course of business. Like you are giving a huge discount to the related party, or you are operating the related parties through a complex chain of relationships, or you are doing the transactions with the related parties without consideration. In one simple line, if I have to say, if the terms and conditions of the transactions with the related parties are not as per normal course of business, then the risk will be higher. So that's what even they try to say here. However, the nature of related party relationships and transactions may, in some circumstances, give rise to higher risk of material misstatement. In some circumstances, but in a few cases, the risk of material misstatement will be very high when it comes to related party transactions. When, sir? Let us see what they are saying. So once again, I will read the statement. However, the nature of related party relationships and transactions may in some circumstances give rise to higher risk of material misstatements. This will be, examples are as follows. In which circumstances the risk will be very high, sir? Let us read it. Number one, related parties may operate through an extensive and complex range of relationships and structures with a corresponding increase in the related party transactions. That means when you find that the related parties are operating through a very complex chain of relationship. Sir, what do you mean by complex chain of relationship, sir? Let me put it this way. Complex chain of relationship means, example, assume you are conducting audit of X Limited. If your client is having Y Limited, one related party, subsidiary, Z Limited, associate entity, related party. See, this relationship is very simple. So here, less chances for manipulation. But assume that you are conducting audit of client X Limited. Now X Limited is having a subsidiary Y Limited. This subsidiary is having an associate company Z Limited. In this company, one of the director is there. That person is also a director in another company A Limited. See here, the relationship between A limited and X limited is related only, but it is a very complex chain of relationship. If it is a simple relationship, you can easily identify the manipulations. But if you came to know that like this, related parties are operating through a very complex relationship, there the risk will be very higher. Why? Because in this case of in this kind of complex relationship, sometimes it becomes difficult for you to identify related parties first of all. When the related parties are operating through this complex relationship, sometimes you yourself will not be able to identify who is a related party, who is not a related party. So that's why the risk of happening a misstatement is very higher when the related parties are operating through a complex chain of relationship. Number two, information systems may be ineffective at identifying or summarizing the transactions and outstanding balances between an entity and its related parties. See, to explain this, once again I will take the help of annual report. See, just now I have shown Reliance Industries Limited audit report. Sorry, financial statements I have shown I have shown you how the uh, related party disclosures will be given. So if you see here, they are showing related party transactions with the related party transactions. Like for example, what transactions you have done with the related parties, what purchases of PPE you have done from the related parties, what purchase of investments you have done in the related parties. So between the related party transactions, so many disclosures are given. Do you think a person will sit and identify all the related party transactions and find out these total figures? No. So now what actually happens in the market is we have these softwares like SAP, ERP, these kind of advanced softwares we have. Now what some big companies they have done is in the ERP itself, they have given certain criteria. The software, whatever, the accounting software, whatever they use, that software itself will identify the related parties. It itself will generate the transaction reports. It itself will generate the summary. So whatever summary we are saying here for the related party transactions, this is not prepared by one person. So today the softwares, the advanced accounting softwares which the clients will use, those softwares will automatically generate this report. Sometimes what will happen is those softwares which are generating this related parties transaction summaries, they might not be effective. Sometimes there might be a bug in the accounting software because of which the software might not be able to identify who is a related party, who is not a related party. Sometimes even though there is a related party software, because of some error in the software coding, it might not identify it as a related party and those transactions might not be included here. So this is one more risk. Sometimes the risk of related party transactions is much higher when what they're saying in the material. So sometimes the risk of material misstatement will be higher when whatever information systems, that is whatever accounting softwares that are getting used to identify or summarize the transactions with the related parties are ineffective. So when the client is not using a good accounting software for identifying related parties, then also the risk will be very high. Similarly, the risk also will be high when the related party transactions may not be conducted under normal market terms and conditions. For example, some related party transactions may be conducted with no exchange of consideration. As I have told, when the transactions are not happening as per normal terms and conditions, especially when the related party transactions are happening without consideration, then the risk will be very high. Clear? So what is the summary of the second paragraph, guys? Nature of related party transaction. First, they are telling that if the related party transactions are also happening in the normal course of business only, then they might not carry higher risk of material misstatement. But particularly in some cases, the risk of material misstatement arising from related party transactions will be higher. Three such examples I have given. Number one, related party transactions may operate through a very complex range of relationships. Number two, whatever information systems that are used to identify and summarize the related party transactions, they might be ineffective. Number three, related party transactions may not be conducted under normal market terms and conditions. Clear, everybody? So this is what regarding nature of related party relationships and transactions. Understood, everybody? So this is what the second item is. Clear? Clear and comfortable? So since we have seen the nature of related party transactions, let us now try to understand what are responsibilities of auditor. See, as I've already told you, as an auditor, your responsibility is whatever accounting and disclosure requirements are there as per applicable financial reporting framework, whether all that accounting and disclosure requirements are fulfilled or not. Obtaining that audit evidence is your responsibility. That's what they try to say it in complex sentences. The concept is very easy. This is what the underlying statement they want to make. But as we all know, they don't say it in a straight way. They have to ghuma firake and say it. The same thing will happen even here also. Let me prove it. So obtaining, the first responsibility of the auditor, obtaining audit evidence about accounting and disclosure requirements. That is your responsibility regarding related parties, regarding related party transactions. There are so many accounting requirements and disclosure requirements. Whether they are done properly or not, obtaining evidence is your responsibility as an auditor. So there are specific accounting and disclosure requirements for related party relationships, transactions, and balances to enable users of the financial statements to understand their nature and effects on the financial statements. The auditor has a responsibility to perform audit procedures to identify, assess, and respond to the risk of material misstatement arising from entities' failure to appropriately account for related party transaction. So first point they are telling, there are so many accounting and disclosure requirements regarding related party transaction. Second point they are telling, the auditor is having responsibility to perform audit procedures to identify whether there are any misstatements or risk of material misstatements relating to related party disclosures. Third point, the auditor needs to obtain an understanding of entities' related party relationships and also transactions sufficient to be able to conclude whether the financial statements insofar as they are affected by those relationships and transactions achieve a true and fair view and are not misleading. Nothing but you take the time, try to understand who are the related parties, what transactions are happening with them, try to perform audit procedures, obtain audit evidence, and make sure that the financial statements are giving a true and fair view and they are not misleading, especially because of related party transactions. Simple. So once again, if I summarize it, first point this is there are specific accounting and disclosure requirements. Number two, you have to perform audit procedures. Number three, finally, you have to conclude whether the financial statements give a true and fair view and they are not misleading because of related party transactions. That's it. And even if you remember one more thing, when we discussed the chapter of fraud and responsibilities of the auditor, I told you, or ignore the fraud and responsibilities of the auditor chapter. As we all know, whenever you have a related party transaction, don't you think that is an indication of fraud? There is an indication that might be a possibility of fraud. I'm not telling if there is a related party transaction, compulsorily there will be a fraud. I never said that. But what I'm actually trying to say is, the moment you realize that your client is having so many related party transactions, don't you think that is an indication, that is like a little bit of indication that there might be a chance of committing fraud? So what I want to say here is, when you came to know that your client is having a related parties, immediately a doubt should come to you. What doubt should come to you? Okay, since there is a related party transaction, there might be a possibility. See, don't conclude it. Don't come to a conclusion there is a related party transaction, compulsorily there is a fraud. No, don't conclude it. Just raise that suspicion. Since there is a related party transaction, there could be a possibility of fraud happening. So that is what they're trying to say here, identifying the fraud risk factors. Try to identify, is there any fraud risk factor? Nothing but, so if I read it further, understanding about related party transactions and relationships helps the auditor in identifying fraud risk factors, because the fraud can be easily committed through related parties. Nothing but you have to be a little bit more alert when you are verifying related party transactions. Why? Because that could be a fraud risk factor. When you have related party transactions, the chances of happening fraud are little bit higher. And inherent limitations arising out of related party transactions. Even having related party transaction is also inherent limitation. Why? Because sometimes as an auditor, we will not be able to understand who is a related party, who is not a related party. So because of this reason, sometimes we will not be able to identify the frauds happening because of related parties. So that's why, because of related party transactions, the chance of our opinion going wrong are much higher. Nothing but, in case of related party transactions, the chances of inherent limitations, the impact of material, the impact of inherent limitations is much higher. That means if you have related party relationships or transactions, the chances that your opinion can go wrong are higher than when compared with other limitations. Why? Because sometimes as an auditor, you might not be in a position to identify who is a related party, which transaction is a related party transaction, that you might not be able to identify. So that's why, because of related party relationships, the impact of inherent limitations will be much higher. That means because of related party relationships, the chance of your opinion going wrong are little bit higher. The same thing they say here. However, because of inherent limitations of audit, there is always an unavoidable risk that some material misstatements of the financial statements may not be detected, even though the audit is properly planned and performed in accordance with standards. Didn't I teach you this? I have already taught you. So we have discussed this in the chapter Nature, Objective and Scope of Audit. Because of inherent limitations of audit, no matter how effectively you do the audit, there is always a chance of your opinion going wrong. That chance will always be there. The same thing they say, because of inherent limitations, no matter how effectively you do the audit, your opinion might always go wrong. So that's why in the context of related parties, the potential effects of inherent limitations on the auditor's ability to detect a misstatement are greater. Nothing but especially when it comes to related party relationship, the chances of opinion going wrong are much higher. That is what the meaning of the potential impact of inherent limitations being higher. So in the context of related parties, the potential effects of inherent limitations on the auditor's ability to detect material misstatements are greater. That means because of related party transactions, the auditor's chances of opinion going wrong are much higher. Why? Because the management themselves might not be aware who is a related party, who is not a related party. Sometimes the management of the companies itself will not be able to identify who is a related party, who is not a related party. Take for example, there is one company. In that, one director is there. This director is partner in another firm, but he never disclosed it to the company. He never disclosed that he's a partner in so and so partnership firm. Now you tell me, will the company will be able to identify that that firm is also a related party? Might not be possible. So sometimes management themselves might not be aware who is the related party, who is not the related party. And also related party relationships provide a great opportunity for collusion, concealment and manipulation. So why the inherent limitations are much significant in the case of related party relationships is, number one reason, sometimes management themselves might be unaware who are all the related parties, and related party transactions always give a greater opportunity for colluding and also for concealment or manipulation by the management. So that's why the impact of related party transactions increases the impact of inherent limitations. And you can reduce your risk to a little bit manageable level by maintaining one quality, which is professional skepticism. So especially when you are verifying related party transactions, you have to maintain professional skepticism. What is professional skepticism? Maintaining an attitude of questioning mind, being alert to unusual circumstances, critical assessment of audit evidence. You should not blindly accept anything that everything will be correct only, why the management will do the mistake. This kind of blind acceptance should not be there. You should maintain an attitude of questioning mind. That is even more important in the case of related party transactions. So by maintaining professional skepticism, you can reduce your risk to a certain level. Understood everybody? Clear and comfortable? So the same thing. This is what the summary of this paragraph. So what are responsibilities of the auditor? Number one, you have to obtain audit evidence regarding accounting and disclosure requirements. Number two, you have to identify the fraud risk factors. Number three, you have to understand that the impact of inherent limitations is much higher because of related party relationships, and also you have to maintain an attitude of professional skepticism. Understood? So this is what the third point. Now let us come to the next point. How the auditor can verify the existence of related party transactions. So till now you have to do a lot of things regarding related parties, but will the standard not provide us any guidance where to look for to identify related parties, which documents we should study to identify the related parties? Standard should at least guide us, no? So don't worry, the standard has guided us how an auditor can verify the existence of related parties, what documents he has to verify, what things he has to check. That they have given a few examples. So like if you see here, the auditor may inspect the following records or documents that may provide information about related party relationships and transactions. So if you want to know existence of related party transactions and relationships, inspect the following documents. Which documents, sir? Go through their income tax returns. In the income tax returns you will find out, or information supplied by entity to regulatory authorities regarding like for example, if you are conducting audit of a company, check the information submitted by the company to MCA. So by verifying the information which is submitted to regulatory authorities, by that you will come to know whether there are related parties. Shareholders register, try to verify shareholders register, by that you will come to know who is having significant ownership in your client company. And also verify the statement of conflict of interest from management. Like as I have told, for example, in the Companies Act there will be one concept. If assume that X Limited wants to enter into a contract with Y Limited, but in this Y Limited company, if some director is already having some interest, he has to give one declaration to the company called conflict of interest. Sir, my this company is going to make a contract with Y Limited, but as a director, I have some interest in this company, so I have a conflict of interest. I will stay out of this decision. So that statement submitted by the director, we call it as conflict of interest. You even go and read that conflict of interest. By that also you will come to know which is a related entity, which is not a related entity. Record of entities investments. Go through the entities investments. In which company in which entities your client is going and investing. That will let you know who are subsidiaries, who are associates, who are joint ventures. You will come to know about it. Similarly, read the contracts and agreements with key management, those charged with governance. Read the agreements which are entered with the top level management. Significant contracts and agreements not in ordinary course of business. If you find any contract, any agreement not in the normal course of business, verify that contracts and agreements might be that is a related party. Specific invoices and correspondence from entities, professional advisors. Even check whether they are getting any communication correspondence with entities, professional advisors like lawyers. Sometimes what companies will do, they will collude with the lawyers. They will take the help of professional lawyers to hide the related party transactions. So that's why check whether any invoice or correspondence is there with entities, professional advisors like lawyers. Life insurance policy, check whether for which people your client is taking for example, you are conducting audit of company. Check for which people the company is taking insurance policies, because whoever are important, for that people only they will take the LIC policies. No, so check the life insurance policies acquired by the entity. Check any contracts which are renegotiated. Verify whether any contracts are getting renegotiated. If the contracts are getting renegotiated, generally once a contract is finalized, renegotiation will not happen. Renegotiation will happen only in the case of related parties. So check whether any contracts are renegotiated, and even read the internal auditors report. Check whether any internal auditors told about related parties, and also documents associated with entities filings like SEBI, prospectus, etc. Even check the documents which are submitted with securities regulators like SEBI, etc. By going through all these documents, you will come to know are there any related parties. If yes, have they done any transactions? If you want to know it, you have to go through all these documents. That's all. This is what SA 550 is simply trying to explain us. So what we have seen: meaning of related party, meaning of nature of related party relationships and transactions, what are the responsibilities of the auditor regarding it, and how the auditor can verify the existence of related party. And even if you see here in our chart book, in our colored charts, whatever we have prepared, the same thing will be there here. The same thing is there here. Even in the charts also, this entire standard I try to summarize it. So like as you could see, what is the meaning of related party, what is the nature of related party, and what are the responsibilities of the auditor. Like I have given 4 headings: obtaining audit evidence, identifying fraud risk factors, inherent limitations, maintaining professional skepticism. Similarly, how the auditor can verify the existence of related parties. So entire standard I have tried to summarize it in the form of the simple colorful charts. You can use it. Understood? Clear and comfortable? Now let us have a look at few questions, how the questions will be tested. Let us see. P Limited is a company from a business group ABCD and is engaged in trading of garments. Okay. The promoters of the company are promoters and directors of some other group companies also. That means they are having related parties. You have been appointed as an auditor of P Limited. P Limited has entered into various intercompany transactions, that is related party transactions, during the year which are outside its normal course of business. What will be your duties as an auditor in those transactions? Nothing but if you came to know your client has entered into related party transactions, as an auditor, what are your responsibilities? That responsibilities anyhow we have clearly written in point number C. So write those responsibilities. Next one. Explain how the auditor can verify existence of related party transaction. This last part they are talking about how the auditor can verify existence of related parties. Write a short note on related party relationships and transactions. Nothing but they are indirectly asking you about nature of related party transactions. So just write the second point. Understood? So that's all regarding this SA 550 related parties. Hope you guys have understood this session in a detailed manner. Thank you so much guys. Bye everybody. Take care.